Good morning, and welcome to Business Review, your trusted source for comprehensive coverage of today's business updates.
Investors are on edge as they await earnings reports from major tech companies, a Federal Reserve policy meeting, and crucial employment data in a week that could significantly influence the short-term direction of U.S. stocks following a period of intense market volatility. A prolonged rally in large tech stocks faltered in the latter half of July, leading to a sharp decline. The S&P 500 and Nasdaq Composite Index experienced their most substantial one-day drops since 2022 on Wednesday after Tesla, TSLAO, and Google parent Alphabet, GOOGLO, reported disappointing earnings. We shall be reporting on this.
More turbulence could be on the horizon. Next week's earnings from Microsoft, MSTO, Apple, AAPO, Amazon.com, AMZNO, and Facebook parent Meta Platforms, METAL, will further challenge investors' tolerance for potential earnings misses from tech giants. The strong rallies in the world's largest tech firms this year have driven markets higher, but also raised concerns about overvalued stocks. Although the S&P 500 is just about 5% below its all-time high and has risen nearly 14% this year, some investors worry that Wall Street's optimism regarding earnings growth may be overblown, leaving stocks vulnerable if companies fail to meet expectations in the coming months. Investors will also closely monitor the Federal Reserve's statements following its monetary policy meeting on Wednesday for hints about upcoming interest rate cuts, which many market participants expect to start in September. Additionally, employment data at the week's end, including the pivotal monthly jobs report, could reveal if a nascent slowdown in the labor market is worsening. This is a critical time for the markets, said Bryant Van Cronkite, a senior portfolio manager at Allspring. There's a growing skepticism about the high prices of AI-driven businesses, while the market fears that the Fed might miss the opportunity to ensure a soft landing, causing a volatile reaction. Recent trends indicate a shift from high-performing tech leaders to sectors that have underperformed for much of the year, such as small caps and value stocks, including financials. The Russell 1000 Value Index has risen over 3% this month, while the Russell 1000 Growth Index has fallen nearly 3%. The small-cap-focused Russell 2000 has surged almost 9% this month, whereas the S&P 500 has dropped more than 1%. Even robust earnings might not be sufficient to lift the overall market out of its recent slump in the near term, said Keith Lerner, chief market strategist at Truist. The market will react to the fact that tech stocks have declined sharply, he noted. Even if tech stocks bounce back due to strong earnings, many investors will likely sell to take advantage of any gains. Any indications that the Fed perceives a more severe economic downturn than anticipated could also unsettle investors, disrupting the narrative of cooling inflation alongside resilient growth that has supported markets in recent months. We expect the Fed to remain data-dependent, but the data has been inconsistent, said Matt Perron, global head of solutions at Janus Henderson Investors. Conflicting economic signals include faster-than-expected GDP growth in the second quarter alongside declining manufacturing activity. Markets currently predict with near certainty that the Fed will start cutting interest rates at its September meeting, with expectations of 66 basis points in total cuts by year-end, according to CME's FedWatch tool. The employment data at the end of the week could influence these expectations if it shows the economy is slowing faster than anticipated, or conversely, if it suggests a resurgence in growth. The recent market sell-off could be seen as a healthy correction in a bull market, helping to eliminate excess speculation, suggested Charles Lemonides, head of hedge fund ValueWorks LLC. In the long run, growth stocks are likely to lead us to another market high, he said. Back to you, John.
Thanks for that update. Thanks for tuning in to Business Review for your daily dose of business updates. Don't forget to hit that subscribe button and turn on notifications so you never miss out on breaking stories and insightful analysis.